to you. For 2 days in a row, Tyre stocks have been running hard.
Yes, they have. There are a couple of reasons now. After a long time, we've seen that the dumping of cheaper Chinese tires into India has reduced drastically. So the imports from China that we see have come down. That's because the Chinese manufacturers are now more interested in dumping into the US markets because that market has become more lucrative. The US Congress, the Department of Congress has not put out a anti-dumping duty on Chinese truck and bus radial tires. So because there's no anti-dumping duty, now it's become more lucrative for Chinese companies to dump into that market rather than India, which is of course good for us. For India particularly, the Chinese truck and bus radial imports have shrunk to 155 containers in Feb versus about 455 in October of last year. This is of course positive for domestic players because now their sales will improve and importers are unlikely to bounce back anytime soon. Apart from that, rubber prices have been declining as well. Not as much, but there has been a marginal decline. So currently domestic rubber prices stand at about 150 rupees a kilo versus about 162 to 163 that we saw in the month of February. So month on month there has been a decline, which will definitely be a positive. Also, I must mention that a couple of companies like Apollo Tyres have gone ahead and taken price hikes in certain categories in order to pass on the higher rubber prices from the previous quarter. So a couple of these factors put together is improving the environment for the sector.